Hello everyone, welcome back to our YouTube channel. So today I'm going to talk about investment banking and I'm going to discuss a few more topics on investment banking, basic concepts like what are the key roles of investment banking and how these investment banks make money and what are the different types of securities investment banks deals with and what is the structure of investment banking and how this investment banking is different from traditional banking. So I'm going to cover all these topics in this video. So let's start our classes. So first we'll talk about what is investment banking. So guys, this investment banking is all about moving money from where it's not being used to where it can be used. I'll tell you an example. Let's say you have a great idea, but don't have the money to start the business. I have an idea, but we don't have a money to start the business. So now the investment banker will help you to get money. How they will help you to get money? Suppose we have a company and it has some shares. Okay. So the investment banker will try to sell these shares to the people who want to invest in our business. We have a people who wants to invest in our business. So the investment banker will try to sell these shares to the people. So the investment banker will come into the picture. He will try to sell all these company shares to the people who want the shares. This is how the money is moving from one person to another person. These are all the persons who have a money who want to invest. So now the money is moving from the persons who want to invest to the people who need money to start the business. So to get this process done, these investment bankers will come into the picture and these guys will help them to start their business. Basically, they're helping to meet the requirement of capital. So let's understand this concept even more bigger. Suppose this investment banking might sound a bit confusing at a first, but it's actually about helping companies, guys. Not only companies, it can be governments or even large organizations. To get the money, they need to grow. Suppose there are companies, or it can be governments, or it can be big organizations. It can be private organizations or public organizations. So to start their business or for expansion plans, if they're going to take care any big project, if they need a capital, if they need money, so these investment bankers will come into the picture and they will help you to solve their financial problem. That's the reason we can say these investment bankers are financial problem solvers. We can say these are the financial problem solvers. Okay, so we can say like the job is to connect the people who need money to the fund their projects with the people who have a money to invest. Let's go back to the previous example. Here, these are the people who have a money. These guys are the people who have a money, and these are the companies who want money to start their business or to start their project. Now, the investment banker is connecting these two parties. They're connecting between each other. That is the main role of investment banking, guys. Understood? Let me give you one more example for this. For example, imagine a big tech company is there. Some tech company is there. Tech company is there. Now, they wants to build a new offices, or let's say they're going to take care any big project. So for that, they need a lot of capital. So they will help approach. Basically, they're going to approach investment bankers. So the bankers will help them to raise their money. If they need a money, need money. So these guys are going to raise this money. How they will raise this money? They are going to sell this company shares. What is company share? Share is nothing but part of ownership. Part of ownership. Let's imagine this total tech company value is 100. So they'll divide 100 into 100 shares. and they are going to sell this 100 shares to the people who wants to invest in their business. Whoever want to invest into this business, they'll come and they'll purchase these shares so that the money will move from these persons to this company. So the company can also get their capital. These persons also can invest into this business. That is how the money is moving from one person to another person. So these bankers help them raise this money by selling pieces of ownership in the company. That's we call them as shares. The pieces of ownership is nothing but share. Or sometimes they'll also arrange some loans, not only in the form of selling shares, they'll also arrange some loans as well. Suppose the tech company don't want to sell the shares, so what they'll do, they'll arrange some loans, the loans from the bank or financial institutions. Or sometimes they'll also issue some bonds. What is bonds? Here, part of ownership we are calling them as a shares. Here also we can say is part of loan. We call them as a bonds. Suppose they need a 100 lakhs loan. If they need 100 lakhs of loan, now they are going to create this 100 lakhs of loan into 100 shares, 100 bonds, sorry, not shares. They are going to create 100 bonds. Each bond value is 1 lakh. So whoever wants to invest into these bonds, they can go and purchase these bonds. That is how it will work, guys. Getting the point? Yeah. So now coming back to the concept, let's imagine a big, I mean, the example that what we discuss here. So we have seen this example. Now I'm going to talk about key roles of investment banking. What are the major and key roles of investment banking? Key roles of IB. Okay. The first role of the investment banking is capital rising. Capital rising. They will help in capital rising. We can say simply getting money. Imagine your favorite coffee shop wants to open 10 new locations. There is a coffee shop, they wants to open 10 new locations. I mean, 2 new shops in different locations they want to open. Okay. So now then they may need a lot of capital, right? Because to start their business in 10 different locations doesn't have enough money. So they go to an investment bank. They will go to investment banking. Now the investment bank will help to sell their shares. To whom they will sell shares? They will sell their shares to the public. Here we have a public, and this side is having company. This is called coffee shop company. Okay. So this company shares are there. Let's say there are number of shares, and we have number of people as well here. Okay. Now this investment bank is coming to the picture, and they're helping to sell these shares to the public by following different methods. We have different methods to sell the shares, different processes there. Further, again, we are going to discuss the topic like how they will sell their shares to the public and all in different concept. The primary market and secondary market we will discuss. But here, let's understand in layman terms, this investment banking is going to help this company to sell the shares to the public. So once they start selling shares, they are going to sell the shares to the specific price to these people. So if these people wants to purchase this company shares, they want to pay something, right? So in return, they will pay some money. In return, they will pay money and they will get shares. That is how they will sell the shares to the public. That's how even the company is getting the capital, required capital, so that they can start their business, they can expand their coffee shops, they can start their business. So in this process, the capital raising process, these investment bankers are going to help the companies. That's the point. The next role of the investment banking is they are going to help us in financial advisory as well. Finance advisory. Financial advisory. So what is financial advisory? Giving advice on financial topics. Suppose, let's say, one company wants to buy another company. There is A Limited and there is a B Limited. Okay, now this A Limited wants to purchase B Limited. One company wants to purchase another company. They are going to acquire another company. Now, this investment bankers will help by giving advice on whether the purchase is a good idea or a bad idea. Suppose if they want to purchase this B Limited, the investment bankers is going to assess this company position. They are going to analyze this company position. Is it good idea to purchase this company for so and so price, or is it a bad idea? They will provide an advice so that the A Limited can take a decision. Is it a good to go ahead and purchase the company or not? So these kind of transactions also can be, I mean, the advice can be given by the investment bankers. That's we call it as financial advisory. So this kind of financial advisory services as well will be provided by the investment bankers. Okay. The next one is corporate lending. Corporate lending. What is corporate lending? See, sometimes companies even may need a very quick cash for short-term investment, I mean short-term purpose. Let's say they're going to plan some big investments, some bigger loans are in the process. In order to avoid being stopping their regular operations, if they need a short-term capital, immediately they can go and approach these investment bankers just for short-term requirement, maybe for less than 1 month or less than 6 months, less than 9 months or 3 months purpose. If they need a short-term cash, they can approach investment bankers. Okay. Once they approach investment bankers, these guys will help them in getting cash. We call them as a quick cash. Whenever they want, based on their company position and all, they might have assessed their company. So immediately they would provide their quick cash to the companies. So this is called corporate lending. But this corporate lending is possible whenever they have a close relationship with investment bankers and when they have a much uh, research might have done by the investment bankers on that company so that they can offer the loan as per their assessment, as per their credibility, as per their or is say yeah credit worthiness. They will provide these loans to them. That is called corporate lending. And the next one is sales and trading. Sales and trading. Sales and trading is nothing but buying and selling, guys. Buying and selling. What we are buying and what we are selling? Company shares. If they want to sell company shares, the investment bankers are helping, right? Similarly, if any investor want to purchase any shares, if they want to sell shares, they have to take a decisions, right? Smart decision is required when they want to purchase, at what quantity, what is the price they have to invest, and what time we have to exit the market, when we have to purchase and when we have to sell the market. So taking decisions and getting much return is more important. That's the reason these investment bankers also help investors in buying and selling the things like stocks, bonds, all these kind of securities in the investment banking. At this point of time, we're just talking about stocks and bonds, and we are going to discuss few more financial instruments that investment banking deals. But let's stick to this topic. Buying and selling decisions is nothing but when we have to purchase and when we have to sell our shares. This kind of decision making advices will be given by the investment bankers because they're into the continuous research of all the companies and their market trends and everything. That's the reason they can provide this kind of decisions. So investors make a smart decisions, and in return, these investment bankers also will charge certain fees. They are not providing these services for a free of cost. They'll also charge certain fees. By charging these fees, they'll also earn money. So these are the trading services. Buying and selling services also will be provided by the investment bankers. Okay. Then one more service is called research. I told you, right? These investment bankers will be in a continuous research of a market trends and everything. So these guys will do this research as well. So this investment bankers do research in companies, not only in companies, the economic trends and market and many things. So these will help investors to decide where to put their money. For example, if company is doing well, so investment bankers will tell you it might be a good time to buy the company shares. So that kind of advices can be given by the investment bankers. If they want to provide such kind of what do you say decisions or advices to the people, they should be in a research part as well. The continuous research on market trends and investment, the economic parameters, everything might have been done in a research part. That's the reason they'll be engaged in a research as well. So these are the major roles of investment banking. One is capital raising and a financial advisory. They would provide an advice on companies purchasing and investment decisions and all this. And also they do corporate lending. If companies wants short-term capital requirement, they will help you to, they will help companies through short-term loans and sales and the purchasing of securities as well. They will provide some decisions and finally the research part. So all these kind of services will be provided by the. Now we will see how this investment banking is different from a traditional banking. Traditional banking, we know they are from so many years versus investment banking. See, these traditional banks are like piggy banks. You put money, so you put money into the bank, and the bank lends it to someone else who needs money. So to them, they'll provide in the form of loans, like a home loan, personal loans, or bank loans, personal loans. All these kind of loans will be provided by the traditional banks. Like initially, they'll accept some deposits, like saving deposits, recurring deposits, fixed deposits. All these kind of deposits will be taken by the regular banks. Like we have SBI, Indian Bank, Kotak Mahindra. All these are we can say regular banks, traditional banks. So these will all accept deposits and they will lend it to someone else. So deposits and lendings will be done by the traditional bankers. But instead of doing all these activities, these investment bankers will focus on the raising money for capital raising, for doing the research part and providing financial advisory. All these kind of things will be done by the investment banker. That's a major difference between investment bankers and traditional bankers. For example, if a car company wants to expand, but it needs some more money, it can raise funds, right? Through the investment bankers' help, they'll sell some bonds or they will sell some shares of the company so that investors buy these securities and they will get paid for these shares or bonds so that the amount will be given to the car company. That is how they'll raise money and they'll start their businesses. There's a major difference between investment bankers and traditional bankers. Now we will see different types of securities that investment banking deals. In IB, there are different types of securities. I'm just giving a basic classification of a securities type. Okay. Already during the initial stage of this session, we discussed one is the company shares, another one is the bonds, right? The same we will continue here. So first type is equity. We call them as equity. So how we can recognize equity shares? Equity shares are nothing but ownership shares. Ownership. Basically, if you are purchasing any equity share, you are also becoming the owner of the company. If any one company wants to raise money, it can sell shares to the investors. Basically, they're selling their ownership to the people, investors. Whoever wants to invest into your business, they will come and purchase these shares. Shares are nothing but ownership part of ownership, part of company. So they are selling these shares to the public, to the investors. Investors are becoming a part of the company. If the company does well, then the investors can make money. How they will make money? Suppose there are investors like this. Investors, okay? Investors invested 100 rupees in company. Now the company is performing well. The company is making more profits. They've expanded a lot. Now the 100 rupees share will become 120. The value of investment increased, right, from 100 to 120. So they're making money, they're making profit, they're making gain. That is how the investors will also make profits. Getting the point? So that's the one type of securities. That's called equity ownership. Okay. Then second one is debt capital. debt capital. This is called own capital. This is a own capital, and this is a debt capital. Debt capital is nothing but loans or bonds. Okay, so instead of selling a ownership, suppose there is a company, this company don't want to sell their ownership because there are owners, they don't want to sell their ownership, but still they need a capital. What is the next possible option we have? They will sell their bonds, loans. How can we sell these bonds or loans, sir? Bond is nothing but part of a loan, guys. Suppose I need a 100 lakhs of a loan. This 100 lakhs of loan is not possible for me to get it from a single person, right? From single person to single bank, it's not possible for me to get entire 100 lakhs. So what I'll do, I'll divide this 100 lakhs to 100 bonds. Just for an example, 100 bonds. Each bond value is 1 lakh. So 1 lakh, yes, easily I can sell it to someone else, maybe from the company or maybe to the company or to the individual person, any investor. I can sell this 1 lakh bond. So the people who purchase this bond, investors are there. Okay, these investors will come and purchase this 1 lakh bond. Suppose once they purchase this bond, they'll get 1 lakh worth bond, 1 lakh worth bond. And also, after purchasing this bond, they'll also pay some interest. What they will pay? Interest. The interest will be specified in the bond itself. Is it a 2% or a 3%? Like that, they'll specify. So, as per the rate of interest, they'll also provide interest in a periodically. Let's say every month or every 6 months once, every annually once, they will provide interest as well. Okay, that is how both the investor is also getting profit and company is also getting their capital requirement. Getting the point? Yeah. Then one more kind of security is hybrid securities. Hybrid securities. See, we have seen both of equity capital and debt capital, own and loan capital. Ownership shares, another one is loan part of loan. So here this hybrid securities is a mix of both. They have characteristics of both the loan and also the ownership. Okay, they'll be having both the features. For example, there are preferred shares. Sorry, shit. Preferred shares. We call them as a preference shares. So these preference shares are like both the features will be having for these preference shares. They'll pay fixed rate of dividend, and also after certain duration, there will be possibility of converting them equity shareholders. So that kind of features will be given for this preference shares. Do not worry about it. The types of securities, again, we are going to discuss in depth about equity shares, what are different types of preference shares, how they will get a dividend, what is the priority of distributing dividend. All these concepts will be discussed in the later classes. But as of now, just we want to know the type of securities that investment banking deals with. That's the reason I'm just giving insight. One is equity, another one is a debt capital, another one is hybrid securities. These are the different type of securities that investment bank deals with. Getting the point? Yeah. Now we will see how this investment banking make money. How IB make money. We're just discussing IB will do this and that, right? But how they will make money? The first thing is transaction fees, or we call them as commission as well. Transaction fees or commission. This is a primary source of income. So imagine you hire an investment banker to help you to sell some stocks. Okay. So while selling the stock, for each and every stock that you are selling, they will charge certain fees actually for the service they are doing. They will charge some commission or fees. If they want to buy, if they want to sell any securities, they'll charge some fees, commission. That is called transaction cost or commission. So through that, they'll make money. The next one is underwriting. This is a bit complex topic, underwriting fees, but don't worry. I'm going to cover a detailed topic about this underwriters and what is how this commissions will be calculated and all. But let me give you this basic idea about underwriting. So basically, this underwriting means here we are saying right, the company is selling shares and the investors are purchasing, so that investment banking is making money. So while selling this company shares, let's say for example, the company shares are 1 lakh shares are there. 1 lakh shares are there. Out of this 1 lakh shares, the investment bankers will take a responsibility of selling the shares for 20,000 shares. How much? For 20,000 shares, the investment bankers will take a complete responsibility. Complete responsibility in the sense they have to make at least 20,000 shares. Suppose if they fail to make 20,000 shares, they have to purchase the company shares. Are you getting the point? When company sells its shares to the public for the first time, especially there is a concept called IPO, initial public offering. So during that point of time only, this underwriting will come into the picture. So the underwriting is nothing but taking some risk for the commission. What kind of risk they're taking? They're taking a risk of selling this 20,000 shares. If they can sell this 20,000 shares to the public, they'll get some commission. The company will pay some commission to the investment bank. This is called underwriting. Why, sir? They are only helping to sell the entire shares, right? They're helping to sell the shares, but they're not taking any commitment. They're not giving 100% assurance. That is called normal investment banking job they're doing. But underwriter means which is an additional responsibility they're entering into the agreement for making some extra commission. Suppose they're going to make this 20,000 shares for sure 100%, then they'll get extra commission. They have to sell. That's an agreement. Underwriting is nothing but they're taking a risk for commission. That is called underwriting. So that kind of underwriting fees also they learn. The next one is yeah. The next one is trading income. Already I told you right. Trading is nothing but buying and selling. So here also same thing. So from buying and selling shares, they'll also make profit. How they'll make profit? One is through transaction. For every buying and selling, the investment banking will charge certain fees. In addition to that, they'll also involve in trading. Investment banks will also make a profit through trading the stocks and bonds for themselves. For example, for they can buy a share for 100 rupees, okay, and they'll sell the same shares to 120 rupees. So they can make a profit 20, right? That's how they're making a profit. So this kind of trading income also will be generated by the investment bankers. Okay. The next one is advisory fees. Advisory fee. So this advisory fee is, I told you right, during the key responsibilities of investment banking, they will help in financial advisory and corporate advisory, research part and all. So for doing all this, they'll get paid. When companies are thinking about big decisions like buying another company, they pay investment bank for their advice on whether the deal makes sense financially or not. They want to know about it, right? For that reason, they'll also charge some fees. That's we call them as advisory fee. These are the different types of incomes the investment bankers will make. Getting the point? Yeah. Okay. So we have seen about investment banks and how they will make money. Now we are going to discuss about the structure of investment banking. Let's start with the structure. What is the structure of investment banking? See, the structure of investment banking has been divided into three areas based on the roles and responsibilities in each area. The responsibilities they have classified as into three areas. One is the front office, we call it as a front office operations, and a middle office, and a back office. In India, we will get majority of the jobs in these two areas, middle office and back office. I didn't see any openings or positions for the front office. Maybe there would be persons from IITs or IIMs
but I'm not sure. I didn't see anyone working in a front office operations as of now. So we are going to be either in the middle office or back office operations. So let's continue with this. Yeah. First, I'll talk about front office operations. Front office. What kind of activities will be taking place in this front office? We can say this is a player where deals all will happen. Deals happen because it's a front office where the investment bankers work with companies and big deals, like if there is a merger, acquisition, and if they want to sell any stock or bonds, directly these persons will be involved in the front office. Suppose there is a large mobile company wants to buy a smaller competitor. There is other competitor, so the big mobile manufacturing company wants to purchase another competitor. So the front office bankers would help the phone company or mobile company to figure out how much to offer and what is the process to manage the whole buying and acquisition process, merger process. Everything will be figured out in the front office operations. That kind of decisions and that kind of work will be taken place in the front office. And the second one is middle office. Middle office. So this middle office is something to manage the risk and to create a new products. Creation of new products in the sense, like suppose these middle office of people will develop a new financial products. If someone wants to create a shares and issue, they want to issue to the public or to any financial institutions or something, then these persons will come into the picture. So they will also manage the risk because to ensure the process, I mean, to run the process very smoothly, they'll take care of all these activities. And I mean, from the starting point of creation of a products until they distribute and sell it to the people, the entire process will be taken care by the middle office operations. So they will create a new products. You can say create a new products. Here the product refers to financial product. This is the financial products, and also they'll manage risk. The managing of risk also will be taken place by the middle office operations. For example, the new company creating a new type of a bond, so that helps investors to get a higher returns. So the middle office team might design it and manage its rollout and issuing to the people. Everything will be managed by the middle office. That kind of activities and all. Then finally, back office. We have a lot of back office operations in our India. So this back office is to support all the front office and middle office. The back office people will work. Basically, they will take care of all the technology and systems that allows trades to happen and keep everything organized. That kind of activities, reconciliations, financial statements preparations, and if there is an administration work, these kind of activities will be taken care in the back office operations. So if company, I mean, how do you say, the back office makes sure that all trades made by the investment bank are processed correctly and that are necessary data is recorded or not. That will be verified and reconciliations, everything will be done from the back office. In majority of the cases, our student will get placed either in middle office operations or back office operations. Okay, this is the structure of investment banking. Okay, and we have different types of investment banking also. Types in the sense just based on the capacity of transactions they're dealing. There is a basic types in the investment banking. The first one is we call them as big players. Big players. Big players in the sense, these are large investment banks that work with huge deals and clients like JP Morgan, Goldman Sachs, Morgan Stanley. These are all very big players. They'll always deal with a very large investment, what is it, deals and all. Then we have specialized firms also. Specialized. Specialized in the sense, these are smaller banks, but they will focus on a specific areas. Suppose they want to focus and they want to provide assistance and a startup to raise money or to manage the mergers or acquisitions. In any one of the activity or any one of the area, they will get specialized and they will provide services on a specialized activity. That is called specialized services, specialized firms. Then we have a local focus as well. Local focus, or we can say regional firms also. These banks concentrate on a specific region only. If it is for India, only the Indian related, domestic related activities and transactions will be taken care by the regional firms. So they may also offer specialized services within those areas. That kind of firms we have: local firms and regional firms. This is a basic classification. Suppose, for example, there is a Goldman Sachs, GS, very famous and one of the most well-known investment bank. So they help big clients to buy or sell things like bonds or currencies, or even to make long-term loans for the projects like building power plants, and to manage money of for the wealthy individuals or institutions and all. They'll manage that kind of deals. That's the role of GS. I mean, when I say these GS and all will be part of big players. Okay. Yeah. And then let's talk about type of roles we will see in this investment banking, middle office and back office operations. As a candidate, when we are going for any job in this field of investment banking and fund accounting, we should know what kind of roles will be there in a back office or front office. What is the role of a candidate? What kind of responsibilities will be there if I get placed in the middle office, back office? There's a minimum doubt everyone will have. That's the reason. Let me clarify this doubt also here in the same session. It won't take much time. So first we will see with the middle office. Okay. Based on my experience and my knowledge, I'm sharing all this knowledge. So let's see roles in the middle office. So this middle office supports basically the front office where the deals are made. That's called front office. So it helps to manage the risk, as I said earlier, to create a financial products or to make sure that everything is running smoothly. They are responsible for checking the process and creating some controls. Like if they want to prevent any errors, they have to place some controls, internal controls. So those internal controls will be created and placed by the middle office only. And also the reporting work that supports the trading and deal making activities for the front office. Everything will be done from the back office. Basically, we can say these guys will always support front office. Let's see very specific roles so that you will get much clarity. Risk management. Risk management analyst, we can say. This is one of the designation or role we can see in the middle office. As a risk management analyst, this role majorly will focus on identifying and managing a financial risk. For example, if the investment banks buying a lot of stocks, right? So if the investment bank buys a lot of stocks, this team checks whether there are change. I mean, whether there are changes in the prices might drop. So they help the bank make decisions on how much risk it should be taken. That kind of risk assessment and all will be done from the risk management analyst. For example, imagine the bank is buying a bond from the different countries. Okay. So the risk management analyst will study the political and economical situations in those countries. When there are two countries involved, they should study the conditions of both the countries. So they'll study those conditions, economic and political conditions, and advise the bank on how risky it is to invest there or not. So that is called risk management analysis that we can see in the middle office. Then we have compliance analyst. Compliance analyst. So compliance analyst means there would be a lot of regulatories. Suppose if it is in India, we have like SEBI, Security Exchange Board of India, and RBI. This is the regulators. Similarly, if it is for USA, we have SEC, Security Exchange Commission. So these analysts will ensure that the banks follows all these laws and regulations. Basically, they are going to monitor the transactions to make sure the bank is not breaking any rules set by the financial regulators. For example, if the bank is doing a big deal with a foreign company, with another country, with another company that doing it. So the compliance team checks that everything is done legally, ensuring the deal meets local and international regulations. That kind of checks and all will be done from the compliance test, including certain AML and KYC checks also will be done from the compliance team, compliance analyst. That is one of the role. Then we have a product analyst, product control analyst. Sorry, product control analyst. This is very a famous role. Even if you check in Naukri, just type as a product control, you will see a lot of opportunities in our India as well. Even in Bangalore, Hyderabad also, we can see a lot of companies are offering product control analyst. The major role is verifying the bank's financial products like bonds, stocks, other financial instruments will be there, derivatives and all. So the product control teams make sure all the transactions are currently recorded and reported. So in order to prevent errors which causes the financial losses and all, this team will run a lot of reconciliations. The entire team is going to run a lot of reconciliations every day. The timing reconciliations and cash reconciliation, position reconciliations, those kind of checks and all will be done from the product control analyst through different control checkpoints will be there. So they have to check all these. Suppose I'll tell you one example. One trade will be done. Trade. So after a trade is made by the front office, normally the front office will decide and they will make the trade. So once a trade made by the front office, the product control analyst should check the numbers. Numbers in the sense the value and also the quantity. Checks the numbers to ensure everything matches, like the positions and the cash and everything matches, and the transactions accurately recorded in the system or not. That has to be verified by the product control analyst. It's a major role. We have a lot of opportunities in the product control analyst. There is a company called Society General, Southgen. So majority of the roles will be offered from the Society General for this product control. Even you can search in a Google or a Naukri also, product control analyst, you will find a lot of opportunities here. Okay. Then a treasury analyst. If you get a chance to be part of this treasury analyst, each and every team will get in touch with this treasury team because the team manages the bank's own finances, such as like how much money the bank needs to keep for a daily operations, how much it can invest in elsewhere. So the investment team and cap stock activities, the corporate actions team, the payments processing team, every team needs to be get interacted with the treasury analyst, treasury department. Suppose if the bank makes a big profit, the treasury analyst decide how much they should keep. How much they should kept in the reserves, and how much can be reinvested for more profit. There will be reinvestments as well. So how much we can reinvest for the profits. This kind of decisions will be taken from the treasury department. We are not going to be part of the taking decisions or something, but reconciliations and all will be done from the treasury analyst team. That's what I meant to say. Okay. Yeah. Then we will see the back office operations. Roles in the back office. Roles in the back office. So this back office is the engine room. We can say engine room of the investment banking because this handling operations, processing the trades, managing the data, and maintaining the technology systems, because these are all the things which will support the bank's work, right? So it ensure all the everything running smoothly behind the scenes, so that the deals will be made by the front office can be processed efficiently and smoothly. So the back office team will always support middle office and the front office teams. Without this back office, they cannot close the deals. We will see very specific roles in the back office. Normal operational analyst will be there. As a operations analyst, is a common designation or a common role actually. So this operations team handle the processing of trades and transactions. If it can be a buying, trading, sale trade, the trade should be booked and executed by the back office only. The decisions will be coming from the front office to book this trade, to buy a trade or sell trade. That should be executed and that should be booked from the back office only. So they ensure the trade, once the trade is made, the paperwork is in order and the money is moving, and the assets like bonds or stocks are transferred to the right place. All these checks will be done from the operations analyst. I'll give you an example. Suppose one investment banking is purchasing 100 shares. Okay, once 100 shares of any company purchasing, the operation analyst should ensure that the shares are properly transferred to the investment banking. The shares, the title of shares should be transferred to the investment banking, and also the cash should be settled to the seller. So this is the role should be verified. I mean, as an operation analyst, he should make sure that shares have been received to IB account and cash has been transferred to the seller account. That is how the operation analyst will work. Then there is a trade support analyst. You have one more role called trade support analyst. Trade support analyst. So the naming itself is called a trade support. Basically, these guys will help assist for the tradings. It can be for the buying and selling. All the trades are executed correctly within the rules or not. Whatever the instructions they have received from the investment manager front office, is it properly executed or not? That will be verified by the trade support analyst. So they help resolve any issues with the transactions and ensure everything is settled properly. All these checks will be done from the trade support analyst. For example, if trade is delayed, or we can say there is an error in the process, the trade support analyst should step in. They have to fix the problem. What is the reason for a trade failure? Why the trade got delayed? There would be certain reasons. Trade might got failed, settlement might have done some delays, or if there is some timing issues, timing differences will be there. So he has to find the issue and he has to fix the issue. So trade support analyst also will be there. So these guys will book the trades and settlement reconciliations. All this stuff will be done from the trade support analyst. Basically, the main role is they will just support only the trades, buying and selling of different financial instruments will be taken care by the trade support analyst. Then we have technology analysts will be there. We call them as IT support. I think it's not going to be our IB part. It's something related to technical, because the IT support is something should be done from the IT side. Basically, these guys will ensure like all the software systems and platforms used by the banking. We use a different softwares in investment banking. Suppose for the pricing, we use a Bloomberg. Similarly, we have Capital IQ, we have, and we have different Geneva, Investor, and all. So they manage everything from the trading platforms of database, and making sure that banks operations are running smoothly without any technical glitches or something. Even if there is any technical glitch or something, they will pitch it and they will rectify it. That's a technical part. I don't think we are going to be part of the technical stuff. Then we have a data management analyst. This is also a common role. So data management analyst. So these persons will handle a large amount of data. Again, same thing. Once trades are settled, it can be buying trade or selling trade. They'll ensure the bank records are accurate and up to the date. They also maintain databases. The entire information about the trades, clients, and financial products. So when they're maintaining all this data on a periodic basis, suppose they're handling a daily fund, mutual fund, they'll run all these reconciliations on a daily basis. Suppose they have a monthly reporting, monthly funds, they'll run these reports and they will check all these reconciliations on a monthly basis. So that kind of data management checks will be done from the data management analyst. So yeah, that's all about all the roles and responsibilities. As a fresher, starting in a middle office or back office is a great way to learn how investment banking works behind the scenes, because middle office roles focus on managing risk, ensuring the compliances, and also supporting the front office with the financial control. And back office are more operational, like making sure all the trades are processed correctly and data is managed, system work efficiently. So in the back office, we'll get more familiarity with different technological tools and especially about handling data in Excel and different applications. So both areas are crucial to the bank success. So even if you are not directly making the deals, these roles offer excellent opportunities to understand the process. Yeah, and this is how this investment banking will work, guys. In the next session, I'm going to talk about fund accounting. Similarly, what is fund accounting? What are the different types of fund accounting we have? And what kind of roles and responsibilities we'll be having in the fund accounting? All this will be discussed in the next session. Thank you.